Hello, my name is Bryson Monteleone. Good morning, good afternoon, good evening. Welcome to today's edition of the ISTAT Learning Lab. As always, ISTAT's commitment is to providing education to its membership, and this section coming up should be no exception. Alice, will be joined by Director of Aviation Research from MUFG, Alice Gondry, soon in 2 seconds, as she presents us with her crystal ball. You promised you had a crystal ball to tell us all these things, so this is the learning lab for us to hear about your prognostications, talking about cargo market, overview of last year, reflections for next year, your thoughts on Dublin and your recovering from that. So before we get started, just a couple of housekeeping items. We will be recording this. The presentation will be available on the ISTAT website. Elise has kindly let us have her PDF of her presentation, so you'll be able to take that home with you in the next couple of days, share that with your friends and family over the weekend, and impress all your friends on your knowledge of the industry. And also, if you have a Q&A, please use the Q&A function so that keep it out of the chat. We'll do Q&A. Elise has happily accepted the fact that we keep this interactive so we can talk amongst ourselves. So if there's anybody has questions while she's prognosticating the future, please do so and ask. So first of all, Elise, what questions for you? First is, did you have your pancakes since it's pancake day? You're on mute, so you got to take it off mute. We
It's a good
practiced this.
start. I know we have. I said I don't need to. No, I haven't had my pancakes just yet. I would have some when I get home tonight.
Okay, fair enough. It is the day is young. It's only morning here in DC. You're in London. It's snowy and gross here, but looks like your weather is marginally better. But so before we start, and I hand it over to you, you have a fantastic career. You've now been doing this in the industry almost as much as I have, like 23 years. Started it with at Airbus North America in 2001. IBA for most of your career, and now with MUFG, you come with a long lineage of expertise, not to mention you're also an ISTAT certified appraiser. So because you and I have been in the program together, and I'm former chair, and so now I can ask you questions. But before we get started, so what made you become an appraiser?
Well, I think from my past life, obviously, I did a lot of appraisal, and it was important for me to align with the ethics and the principle at play through the International Society of Transport Aircraft Trading. This is the standard of professional conduit and methodology. And there's a lot riding on the reputation of the ISTAT professional body and where we stand as a cohort of individuals. And it's nice to be represented through ISTAT, but also for ISTAT to keep us accountable and make sure we remain relevant in serving the market with our figures. And I'll dare to correct you, Bryce. I'm a senior ISTAT appraiser.
Well, I was getting there. Yes, and you, where were you all this time when I needed spokespeople on the program? That was perfect. I couldn't even said what you just pointed out better myself. So that was a good summary.
Okay.
And I think it comes with, you started Airbus North America in 2001, which of course was a tough year for the industry, for all of us, and we probably remember those days, that day pretty well, and also kind of what happened afterwards. But I think it's because of that and our knowledge and your knowledge together, like all these cycles that we go through, right? We have 9/11, we have the global financial crisis, now we had COVID in the last couple of years, has made us stronger in our proficiency with regards to the valuations in the markets. But I will not steal any more of your thunder. I think you have a fantastic presentation going forward. I'll butt in if I've got questions from our audience, along with myself. But please take it away. I'm looking forward to this.
Please do. And thank you very much for the introduction. Coming back to the point, and this is kind of the aim of my presentation today, is just showcasing how dynamic the industry is, but how engaging it is, and how we can recover. And by doing so, we bring each other closer and stronger. And it just never ceases to amaze me. So I might be going, going through what I want to say.
Don't get emotional.
Well, no, it's too early, isn't it? Right, I need to share my screen.
Yes, you do need to do that. That is part of this whole thing. Otherwise,
yes.
It'll just be the two of us talking, and people are like, "Yeah, that's boring."
Here we are. Can I just make sure you can see my screen?
Looking good. Fantastic.
Perfect.
Take it away.
All righty. Let me just goes through here. So thank you very much for the introduction, Bryson, and for the opportunity to present today. It is a pleasure to contribute to the great learning platform that is ISTAT, and maybe by association, the ISTAT Appraisers Program as well. And there's a lot to be said about that. Today, I will share with you how dynamic and ever-evolving the aviation industry is, and how by working collaboratively, we can all contribute to its serenity. I may be preaching to the converted, but the resilience and adaptability of the aviation industry never cease to amaze me. I am to keep this presentation short and lively, just as I am. So we will move across to our webinar. That just come up, if I found it. No? There is. Oh, here we are. So this is our disclaimer. As is customary with this kind of presentation, I'd like to draw the audience's attention to the disclaimer associated with today's webinar. In essence, this presentation does not constitute a legal, tax, accounting, investment advice, nor an investment recommendation. Moving on. By way of an introduction, so I've joined MUFG 3 months ago, working for the Global Aviation Finance Office. MUFG is truly both a global and a leading aviation franchise. It has a dedicated global aviation finance office with over 60 colleagues worldwide and wide-ranging in-house expertise. Our breadth of services run from coverage and origination, financing, advisory, structuring, capital markets, asset management, and credit functions. MUFG has 15 billion global aviation exposure, covering 1,200 aircraft amongst 200 clients. The franchise has grown from strength to strength, and last year, MUFG committed over 4 billion and arranged 70 transactions. So in your own time, please feel free to refer to the tables on the slide, which showcase our comprehensive product suite and our complementary value-add services. As you can see, it's very broad and wide-ranging. In terms of our agenda today, there is a plethora of topics we could be covering. And I'm also mindful there has been plenty of webinars recently covering the review of 2023 and a look ahead to 2024. Notwithstanding that a lot of us have only just returned freshly from Dublin and, like Bryson said, recovering from the experience that is Dublin on the end of January. So with that said, I am very keen to focus on just a couple of dynamics in particular. So here are the topics I will cover today in terms of looking in the rear side mirror and also looking ahead, followed by some time allocated for question and answers. But by all accounts, if there are questions coming through, I'm more than happy to answer them as we go along. I know Bryson will be keeping an eye on the Q&A. Our first stop sees the airlines return to profitability. After back-to-back Black Swan events with the pandemic and the Russia-Ukraine conflict, the industry timidly returned to profit in 2022. And by 2023, airlines were showcasing once again healthy operating profits on the back of passenger traffic growth and increased yields. During the pandemic, airlines underwent an extensive cost-cutting exercise, which placed them in good shape to make the most of the the return to traffic to become more operational in terms of their profitability. I should rephrase this altogether, in terms of operational profitability. So traffic growth was primarily driven by the US and the European market, with APAC lagging behind as the region was late in terms of lifting travel restrictions. What we've seen in 2023 is operators increasing their capacity to cater for the resurgence of air travel demand. Government help is being repaid and net debt is decreasing. As a result, IATA has revised its 2023 net profit per passenger from $2.25 to $5.44. And it's obviously a very considerable increase. We're talking of more than doubling their view on their profit per passenger. So it's all very positive and encouraging for the road ahead. Looking at 2023, again, I think 2023 will be remembered as the year of the mega orders. And we are displaying a handful of those, but they are quite substantial and impressive in their nature, as well as a summary of Airbus and Boeing orders for the year, broken down by narrow body, wide bodies, their current backlog, and also the deliveries that took place in 2023. So the general feeling is that many airlines deferred ordering aircraft during the pandemic, which has created this demand bubble post-COVID, with both main manufacturers struggling to catch up with demand. Long lead times. Yes?
Nope. No, go ahead. I was going to give you a chance to take a break, but I was going to ask a question on this slide, but if you want to finish your thoughts, go for it.
Please stop. All right. Well, I'll finish with the slides and then I will take a question. Thank you, Bryson. Long lead times and profits are adding to the ordering momentum. Air India and Indigo top the order leaderboard, leading some market observers to wonder if India is the new China. Their orders are subject to some cautionary watch, as the ratio of backlog to fleet install is extremely high. And this leads me to the quote from Aesop and its associated double meaning. Better one safe way than 100 on which you cannot reckon. In French,
oh, here we go.
The saying goes, un tien vaut mieux que deux tu l'auras. And in essence, what I'm trying to highlight here is some of today's backlog sits with some fragile credit customers, and it remains to be seen whether they will take delivery of the assets. Furthermore, it also leads to the fact that the production ramp-up should not be at the expense of quality control and safety.
Perfect.
I'm very happy to take.
Yeah, no, I mean, since we've been through these cycles before, and first question I have is, what do mega orders like this tell you, given kind of your knowledge of the industry? But two, kind of a follow-up with that, what we've seen in the past is airlines ordering aircraft in good times and taking aircraft in bad times. And that has replicated multiple times now. So when you see these massive mega orders, A, what does it mean to you? What does that tell you about the market? And then B, are we breaking the cycle, or is the cycle been elongated?
This is a very good question, Bryson. I mean, if I were to be candid, my view is to take such orders with an element of skepticism. And I think I would touch upon it as well when I cover the freighter. Is sometimes there's some prospective ordering activity taking place. So it's, like you rightly say, obviously we see this big resurgence of traffic demand, but by the time they actually come down to delivery, where would the market be? And essentially operators would also need to learn to function and be operational and profitable without such capacity. This is kind of high time. So there's a lot of optimism. I think more so if we look at India, obviously is thinking of the infrastructure required to take on all those assets and what the competitive landscape is going to look in the country. I mean, it's highly positive. Essentially, we see high demand and we need the capacity to meet such demand going forward. It's just, I think, because of the timeline between the ordering and the delivery, I'm just very mindful that the economic circumstances and the operating climate might look very different. But like you rightly say, we've seen it before, and it goes back to how dynamic our market is, and it does create opportunity. And people would I mean, here at present, I think people would fight for undelivered slots and taking aircraft, and we've seen it recently, obviously, with with some operators trying to fight for new delivery Airbus aircraft. And it does create opportunity, and it will obviously settle itself, but it we have never seen, I think, orders to that magnitude. And it'd be very interesting to see how it evolves over time. But we've got a good solid 10 years
Yep.
for
I
any
agree.
others to deliver.
And we have some great questions coming in, which we'll answer at the end on kind of off balance sheet financing, what we think going forward as far as what airlines will be doing with these aircraft deliveries. So carry on, and I'll interrupt you in a bit. So.
Perfect. Please do. Enjoy it. So I've just briefly touched upon the freighter market, but what's interesting here is the freighter segment has been an outlier in terms of market dynamics. And this is because during the pandemic, freighter aircraft were flying in high demand when passenger traffic was curtailed. We even saw the inception of the freighters. I quite like that term. So it's passenger aircraft operated as freighter, and those were predominantly used to transport PPE, personal protective equipment, and other medical supplies during the pandemic. But what's happened is this increased market appeal for freighter aircraft during the pandemic, so some speculative orders being placed, as well as conversion slots being booked. However, with the return of passenger traffic, so did belly freight capacity. More so, what we've seen is the freighter aircraft that were ordered during the pandemic, while demand for air cargo outstrip supply, are now delivering in large numbers as supply exceeds demand. So it's essentially it's a reversal to what we are currently observing in terms of the passenger aircraft. So this phenomenon explains why we are seeing a drop in cargo load factors in 2023 to 44%. And one point I wanted to make on this as well is that freighter conversion programs are themselves not immune to supply shortage, and they are to the passenger to freighter conversion program are to subject to the current supply chain challenges, whereby obviously any asset is being taken up, and that would potentially take up aircraft that would have been earmarked for conversion. So in itself, that will somewhat help balance the supply and demand on that market segment. With that said, obviously we have to look at the current operating climate and geopolitical risk. And importers to Europe are increasingly turning to air cargo to bypass disruption to global seaborne shipping lanes around Yemen. So this is the freighter market. I think I've covered everything. And I know, Bryson, you alluded to the finance cost. So there is a slide dedicated to the increase in finance cost. So in the post-pandemic macroeconomic environment, interest rates have been raised to curb inflation. And by doing so, obviously, we have increased the cost of debt and financing in 2023. Now, what we've seen is lessors selling some of their assets to repay some debt and release liquidity to then help them obviously onward with the next purchase of assets. High interest rates are not conducive to asset-backed securitized transaction. This is why in 2023, we've only seen 2 ABS transactions. One was against an engine portfolio with Willis, and the other one was against an aviation loan with Ashland Place. Now, with lease rate rising and asset value strengthening, more ABS activity is likely, and I think a lot of market observers are predicting a return of the ABS market. But as the industry is very creative, what we've seen as well is new products such as non-payment insurance coming into the market. And I think there is opportunity in the market to appeal to different pockets of capital. So whilst we expect interest rate to remain higher for longer, with its breadth of financing solution and in-house expertise, MUFG offers creative and constructive solution for bespoke transaction. And this is where I think the Global Aviation Finance Office is built and organized, put us at a strong advantage to offer bespoke solution in today's financing climate.
So, do you want to answer the question now on airlines looking to take aircraft off balance sheet, or do you want to wait till to the end? So, we have a question. The question comes across as: do you think the trend of airlines looking to take aircraft off balance sheet and have the flexibility of leasing will continue? Is that something you have, or do you want to wait, kind of sum that up in your prognostications?
Oh, we can touch upon here now. I think some airline like a mix of both. It's a bit like edging, obviously. What we've seen is with rates going up, some don't want to be too dependent on the lease rate. So it's, in a sense, if there's a part of their fleet that they actually have bought and own, and part of the fleet that is leased, I think it gives them the right balance, so they're not too affected by any volatility in lease rates, and they still have some element of control over the capacity that they have. You've got to think as well, at present, people cannot get the lift, and it is of some comfort to know they have got their own existing fleet to rely upon from a capacity management perspective in terms of fleet management. So I think an element of both is healthier and good, because you also want to protect yourself from the volatility and high lease rate. Well, I know I touched upon it later in my slides. Obviously, it has become a lessor's market.
Yep. Well, and I think, I was going to say we pivoted. We were above 50% right before COVID, right? Now we've dropped off a little bit. We've retired some aircraft, and I think to your point exactly is that where airlines use leasing as a capacity upsy downsy, if you will. So they always knew every year how many aircraft coming off lease to dispose of in case times are tough, and also renew when they need the extra capacity. I think now sometimes, because of that, now we're looking at lessees now kind of at the backside of that, saying lessors are going, hey, as I think you'll allude to, renewable long tenors and increase in lease rates in order to keep that capacity, or have it yanked literally out of their fleet. In some cases, that has happened where the airline has said, we want to keep the aircraft, like we have a better offer, your aircraft are going, and we have that right to do that. So it's an interesting dynamic for now for the lessor. So carry on. We'll have more questions coming through, I think, towards the end.
I really like it because, again, it really fuels into that picture of our dynamic, our industries. And I think if there's anything I'd like people to take away is industry is dynamic, but it has also got this ability to serve balance. And nothing's very simple, and there's different level of complexity, but it's really fascinating to observe it and see how it plays out. And I really just, I love it. Right. So for a little bit of fun here, the market sentiment from Dublin. And again, I might get somewhat, emotional, but Dublin conference is akin to a giant family reunion. So over the years, your industry partners and colleagues grow to be more than acquaintances and become your friends. And as such, I think Dublin is just a wonderful time to catch up with people we've known for so long, and also get take the pulse of the commercial aviation market, and get to be with each other on a personal level as well as a professional level. So the weather did not disappoint. Neither did the MUFG reception at O'Donoghue's, and the lobby of the Shelbourne was its usual sea of people, so much so that I wasn't able to take a picture because my short size doesn't allow me to see above the sea of people, I'm afraid. So the market sentiment was upbeat, with the main preoccupation being the challenges in capacity planning. As you would expect, we see net zero was prominent on the agenda, with a consensus that progress is being made, but that technological advancements, infrastructures, and harmonization of the taxonomy and emission measurements are lengthy processes that require a concerted approach. In the aviation ecosystem, each stakeholder in the supply chain has a role to play to ensure that net zero by 2050 becomes a reality, and to change the public's perception of the industry's green credentials. There was a palpable positive outlook around recovery and the industry working collaboratively to navigate the current headwinds. And I think what I took from Dublin is, as an industry, we very much trust, and it's really we all together, we trust that the pandemic has helped our sector becoming stronger and more resilient than before. Which leads me to this very catchy tune, "The Only Way Is Up, Baby." I'm hoping Bryson would sing it, but
Are we going to have a music video going on? Because I think this is all you. Go for it. You bring it.
no,
Maybe I'll do some backup for you.
no, maybe next time if I get invited again.
You could have inserted a fancy video right there, but by all means,
I
you
should
know, I
have
didn't want to take
done.
your thunder. If you want to have some kind of music foray in the future,
No, perfect. Well, I'll keep that in mind. So where are we? Obviously, Dublin is very good because it kind of gives you a sense as to what's going to happen in the year, the coming year in 2024. But this is where I think we are. And again, there's so many different topics I could cover. So I've only just focused on a few, particularly, like to follow and that really interest me and I find highly dynamic. So the reference to pre-COVID level is now becoming obsolete. And we have seen it in so many reports. But I think as an industry, we really need to move forward and to look ahead. There is no longer revenge travel to speak of, as most of us have now managed to clock a few air miles in the last few years. Leisure travel is on the up, while business travel still needs to catch up. And admittedly, this business travel element has been replaced in part by the Zoom and Teams calls. While most regions have recovered by 2023, 2024, the year of the dragon, is going to be the year where the APAC region recover fully on the back of a strong resurgence in the Chinese market. As such, the airline industry revenue is expected to grow by 8% to almost 1 trillion in 2024. Load factors for 2024 are projected to reach 83%. So all in all, it really is a positive and encouraging picture. IATA predicts that collective net profits will reach 25.7 billion in 2024, representing a 2.7% net profit margin. So it's the only ways up. It really is an exciting time to witness the return of the aviation industry after the difficult time of COVID. But by all means, I think COVID is behind us, and we just need to move ahead.
So which region? I mean, you have a great chart here, and obviously we knew that APAC recovered kind of as a most recent. I mean, which region do you think has the biggest opportunity?
I think APAC does. And obviously with that as well, if we maybe look at the Indian market. So China, in part with the e-commerce element, but also because it was late in reopening its frontiers, but also I think obviously we've seen the Indian airlines being highly optimistic about the growth in the domestic market and international market.
And so obviously like North America, Europe, we're now kind of on a flatter plane, no pun intended.
Yes.
Okay.
It's a good
I mean,
pun,
there's only so much capacity that can be added to the system in these two regions, right? Or, maybe the sky's the limit, but I think, yeah, go ahead. Sorry.
No, you've touched on, I mean, the key word is capacity, and this is where we're at. To a degree, obviously, the lack of capacity is hampering traffic growth. Yeah. And, notwithstanding, obviously, the costs are growing for airline in terms of the inflation, the interest rates, the oil price, labor, there is still the macroeconomic parameters that affect the profitability. But I think where most market now back on the growth trajectory, I think the APAC region just need to catch up a little bit. So I think this is going to be the region that will foster growth for them on an international level.
Well, I think anecdotally was interesting, and I don't know if you were in Bangkok last year, but it was really intriguing. That was the first trip back to Asia in a couple of years, right? And so to go back to Bangkok in 23 and people were still just emerging from kind of the COVID shell. And we forget that North America and Europe were so far ahead on emerging from COVID, coming back, capacity increasing. And now all of a sudden you have a whole new area which is known for high capacity, dense networks, massive amount of traffic. To just start to reemerge was just amazing, and it was interesting to see that kind of reemergence of a whole region. So yeah, I think APAC is probably just starting, and look how far we've come without APAC. So that kind of goes to what's going forward, because coming back now, and that could be kind of, and again, don't want to steal your thunder, and we can talk about this, is the resurgence of wide body aircraft, right? Because that is now needed. So carry on. You're doing it. This is awesome. Thank you.
To your point, no, I love it. But to your point, obviously, if we look at the ability of the industry to self-balance, in a way, it's quite good that Asia Pacific recovery is faced against the rest of the region, the rest of the world, sorry. But they will need capacity potentially at a later time. So again, that helps manage the supply and demand. And obviously, there's a party next door.
Like, you showed us the room you were in, and it was a very big room. But if you're having a party in the same room while doing this, I commend
no,
you.
it's next door. But obviously, I think again, this is part of where the industry is so interesting, and it's all very intertwined. But in a sense, the delayed return to traffic of Asia Pacific is also helping the industry right now, because it's not, it's freeing some capacity, potentially freeing some order deliveries. It's helping to kind of phase the return to normal for the industry as a whole. So
Well, and then we have to redefine, and I think you go into this, like, what is normal, right? Like, we're looking at, we're comparing we've been constantly comparing ourselves to the end of 2019. And you and I both know that the end of 2019 was a circus as far as upticking capacity. So end of 2019 was a massive industry strength, but it wasn't, I would say it wasn't the normal. Like, it wasn't even keel, if you will. Like, there was a lot of airlines searching for capacity. Aircraft values went up exponentially, only to drop to the depths literally months later. So we look at 2019 as this benchmark, but 2019 really was an aggressive benchmark to be measuring ourselves to, because we were probably normal-ish, maybe middle of 2018, end of 2018. And then now we compare ourselves to 2019 and saying, well, we haven't gotten 2019 yet. Well, 2019 was a pretty robust year. So, I think we have to keep it all into perspective.
And I think, I don't know how you feel, but I think this is what I'd love for the word the terminology of pre-COVID level. I think we really just need to move on, because, like you say, there's no period of time really that is normal or that can be used as a benchmark. And I think the period we're here now, it's all very unknown as well. We've never gone through those black swan events back to back, and we've never seen such demand, such supply shortages. So again, there is no rule books, there is no precedent for us to revisit. And I think the industry as a whole then need to think on its feet and be creative and work collaboratively to make the most of the climate and the dynamics of the market.
Good point.
Move on.
Moving right along.
It is highly exciting.
Oh, this is this is a very vintage picture. I don't know where you got it from, but I had to laugh about that.
Google. Google is the magic sauce. Right, and actually, I'd like to apologize. So pardon me for the retro picture on the slide, but as they say, a picture is worth 1,000 words. And I find it very, very illustrative, but I think it's very telling of what people are trying to do. So in 2024, we expect more consolidation to take place as a method for both lessors and airlines to gain some economies of scale, primarily to secure capacity and market share. Larger players can secure delivery slots and capital more easily. So if we take a look at the lessors, this year we'll see large lessors absorbing smaller lessors portfolio. But on the contrary, as well, on the flip side, smaller lessors will also be vying to gain additional assets to grow to a sizable fleet. On the airlines side, airlines will aim to obtain more synergies through fleet and balance sheet consolidation and optimize their route networks. So I've listed a few of the mergers. This is the one at the top. The anti-competition regulatory body has decided it could not go through because it would harm the end user and the consumer. But what you can see through the list here is that this is truly a global phenomenon. But each deal will face scrutiny from its respective regulatory authority to determine whether it harms the competitive landscape. But it should be an exciting time ahead. And going back to maybe the core theme of my presentation, this would also help in the current climate. If airlines were to merger and acquisition potentially would help somewhat ease the supply and demand, because there will be some routes optimization as well as fleet optimization. So on the continued tightness of supply, the avid viewer will notice that there is a lot more wording on this slide. And this is because this is the biggest, by far the biggest piece of the current jigsaw we find ourselves in. It also happened to be the topic of the panel I was invited to talk to on in Dublin. So there is a lot of moving parts at play here, and they are all compounding in almost a self-fulfilling prophecy to fuel the scarcity of capacity. So what we've got production delays at the major manufacturers. It's quality leakages adding to the current woes. In-service reliability issues are forcing operators to ground their fleet and source interim lifts. So again, we're seeing a need for interim capacity. So that's, for example, what's happening with the Pratt & Whitney geared turbofan engine. There has been a backlog of engine shop visits since the pandemic. What we've seen is a lot of operators did not put their engines through shop during the pandemic. And so that's adding to the backlog. And also the throughput times at MRO is longer. And if we go back to the bullet above, obviously, then you have engines that have not been reliable and also now need shop visit when they wouldn't have been catered for or scheduled for in the first instance. So any valuable capacity is being taken up. In a complete turn of events from the pandemic times when lessors were granting holiday payments, they are now able to recoup some of their losses and locking aircraft on lease at high rates. So it goes back to what we mentioned earlier in terms of the market very much being a lessor's market. And obviously the lease rates are going up. So high demand for parts and materials is driving market appetite for end-of-life assets, even extending to younger assets for which the value of the stripped-down parts is greater than that of the aircraft as a whole. So while operators would rather opt for higher costs than not meeting demand through lack of capacity, the higher assets values and lease rates will ultimately build into operating costs, which cannot be sustainable long-term. So this is a big slide, admittedly, and I hope you've all had a chance to go through it and digest the information. And we have reached our conclusion. I did say it was going to be short and lively. So in terms of key takeaways, to sum up, it is yet another exciting time to be alive and working in the aviation finance industry. We are seeing strong demand for new technology aircraft. Airlines' profitability is rising. While the current production output does not sustain the current demand, OEMs are ramping up production, and you're going to like this one, Bryson. I'm quite proud of how I've coined it. And in the meantime,
yes.
Wait for it.
Okay.
And in the meantime, anything that can fly is taken up and taking off.
Not as good as the Yaz song, but I'll go for it. That's fine. That could be
Yes,
your.
no, that's. I still have one quote at the bottom of this
All
slide
right.
to finish on a high.
I'll get behind that. Yes.
So there are risks associated with the current geopolitical climate, which should not be ignored, alongside the current macroeconomic environment of high finance costs. But the industry is creative, resourceful, and resilient. Through collaboration in the aviation finance ecosystem, the market will self-balance to ensure its posterity. And as per my quote, a rising tide lifts all the planes. But
This is
it
true.
really
This is
is
true.
an exciting time, and there are definitely headwinds, but as an industry altogether, we are stronger. We've got so much in-house, so much, expertise and good connection. And yes, I'm just very confident that we can all help
Yeah.
our industry be growing some more for many years ahead.
Well, I think you bring up you touch some fantastic points. Our ability to maneuver through this, and we've proven that to other about since to around the globe that aviation is resilient and self-balancing. So I'm using your words, but you're absolutely right. I mean, we've gone through this. We thought every time we think there's an externality that causes a massive downtake, or we've survived. Even COVID. Oh, this is the end of airlines. This is the end of leasing. We're all going down, and I think it is a balance of kind of also looking at the bigger picture. Lessors knew that if they let their airlines falter, they have no customers. So there is a point where they have to give in. Lessors had the ability and the balance sheet to support their customers, and their customers in turn now have to be like, okay, well, now you have to pay back for what you were a new lease on life during COVID. I looked at all especially the projections on the last slide. I think they're very intriguing. Let's start at a high off question, which is, what do you think the biggest threat is to any of this? I mean, when you look at when you guys sit down and you look at your portfolio and you look at kind of the future going forward, what's number one threat is what? Or biggest threat is what?
The biggest threat.
One of the biggest threats. You don't have to be not the biggest threat, but it can be. I mean, what is the biggest threat to you when looking at this? And we look at we're balancing our resilience, if you will. What are the biggest threats that still could derail us?
I think because of all the capacity being taken up, there's very few transactions at play per se. And I think there's a lot of increased competition in terms of, playing a part in those transactions. So it's more making sure that we can find creative solution to assist and to have a role to play in transactions that are being signed. But there's, it's essentially, it's so interesting because we've moved away from the plain vanilla transaction. Now you're starting to look into the midlife aircraft or engine as a standalone, and in itself it really shows again we can be resourceful as an industry, and we need to adapt to our environment. But I think potentially as well is what happened during COVID is making sure people are once again comfortable with investing in the industry, and that the outlook is positive, which is kind of the main purpose of today, saying we are in a good place.
Do you think that new investors to the space and our current investors are more comfortable given what happened with COVID and how we were able to bounce back?
I'd like to think so, but it falls upon all of us to make sure we educate the market, and maybe it goes back to the appraisers function as well. It falls down to us to make sure we educate the market with platforms such as today's Learning Lab to to make sure people are comfortable around the industry, around the asset risk, and around the trajectories that we are seeing ahead of us.
Well, and you raised a good point, and a question just came in. Speaking of trajectories, do you see aircraft economic life increasing or decreasing? So let's take that. What do you? I mean, from one of our appraiser brethren. So, what's your thought on that?
I think it will. I mean, the appraiser's guideline is around 25 years for being the economic life of the asset. It's a double-edged equation. I actually think potentially what we've seen with aircraft going through freighter conversion as a way to extend their lives, I think potentially that will come down. But at present, aircraft will be flying for longer until we see the supply demand stabilizing. As there's another element to that, obviously, is you've got to think during COVID, aircraft did not fly for a solid couple of years. So they haven't used any, there was no flight hours or flight cycle usage, but they were time added onto the calendar more so as they needed to be reactivated pending the storage. I think they will be kept flying. And one point I've made during my panel on the midlife aircraft is this used to be the preserve of second and third tier airlines in terms of sourcing capacity. And right now, it's all been taken off. So I think as of when capacity comes through, then there's still a market for the mid to later life aircraft in going in maybe those other airlines that do not have access to as much capital to still be able to deploy some aircraft and fly some routes. That was a long-winded answer. I think it makes sense to a degree, but there's the obsolescence factor, the new technology and the older technologies, the obsolescence factor research that people wouldn't really operate them unless they really have to. More so when you start looking at carbon taxes, potentially you will be penalized by using older assets.
We do have a question on sustainability, which I think I'll get to in 2 seconds, but I wanted to finish this thought because you raised some good points, and you also mentioned something in that one slide about USM part out. And one thing I came away from Dublin with a couple of weeks ago was my thought is, okay, you're absolutely right. We punted to the right current generation technology aircraft because they weren't flying. We've elongated lives. Lessors have commanded longer term renewals, and we also need the aircraft. We have a compression now at the back end of the market, which is there's the fight for P2F and there's a fight for capacity. And then there's the fight for part out. And those that are competing in this space might say, oh, okay, so now we have to pay. We got really cheap aircraft during COVID, yay, and engines. And now we're on the flip side of that because the fact that there's a need to extend the lives of these aircraft that normally be parted out. So do you see the USM space in the next couple of years being challenged because of the fact there won't be as much USM because we're not parting out aircraft right now? We're extending their lives. And then for especially in the wide body space, now all of a sudden everybody wants wide bodies, and that P2F now is going into the wide body space, but also reactivating for capacity. So thoughts on that, and then we'll switch over to sustainability for a bit.
I've got to think about it. I think everyone's competing for anything. People are parting aircraft just because they want the engine fitted on the aircraft. But the PTF market, I think, is somewhat slowing down, and you can't also forget that there's a lot of actual factory built freighter on order book. So I'd like to think that might stabilize as well. For some older technology aircraft, if you look at the parts, there's very little commonality, or there's very little homes for those parts. So that might keep the aircraft flying for the time being. I think, again, once the delivery of new technology comes through, then the demand for parts will stabilize. So I really think we're just going through a transition period, but essentially, and I think it might have been on my slide, it's the question at play is what is the best economic outcome for an asset or engine? It might not be flying. It's whatever the market is demanding in terms of rates. You've got to decide what is your best economic outcome.
And we never thought this would be the case a couple of years ago, right? I mean, this is
Nope.
what's amazing is that we're now looking and going, okay, and we always knew that younger CEOs and NGs would still be in play. I mean, I think that was a given. We just didn't realize how much we're looking at as far as market types that usually are the first to go down and the last to recover. You know, we're looking at 737-700s, A319s, some of the older ones that are that we kind of go, okay, they're not core asset, but they still fly and they still perform very well. So it's interesting. So let's take that and switch to sustainability. Both of our firms work in this space. I know PwC, we are working with a lot of lessors on reporting, sustainability, trying to get going down that path and taking advising on strategies. I'm sure MUFG has a position on the challenges going forward. What are you saying to your clients on the sustainability, sustainability finance, and kind of what's the views going forward, given the global juxtapositions?
So MUFG does do sustainability linked loans, but also as part of our financing transaction, we try and have an ESG hook. So we would look at what companies we are working with are doing in terms of diversity, governance. And so there's a lot of plans, and more so obviously outside of just the aviation finance office, we do finance some solar farm and wind farm. So we are actively involved, just even on a day-to-day basis. Obviously, we are being encouraged to educate ourselves on our own day-to-day mission, down to when we book flights for our travel. So we absolutely engage with our clients on the sustainability piece, and where we can, we want to foster relationship to make the world a greener place.
Is that message different? I mean, obviously the Europeans have a view, Asia has a view, US a little bit different here. We're facing kind of, if you look at the threats of what's on the horizon politically, and this is not a political discussion by any stretch, but going forward, the sustainability agenda could be literally almost wiped off the map theoretically. So is there different messages between the US and Japan? I mean, just kind of general takeaway on that, and then we can go to a different question.
I think because the way our aviation finance office works, it's just one global office. So it's those ESG criteria, the sustainability piece, we kind of apply globally, regardless of the geographic area of our clients. And it remains a worldwide.
And is it, I mean, are the clients receptive? I mean, are those saying we need to be there, or like we can't do this yet, or this is a goal? I mean, what are you getting back as feedback when you start to talk about, when we get really into sustainability like finance? I mean, is this something that is receptive, or like not there yet, or we need to be there?
I'm not as versed as some of my colleagues into that field, but what I'll say is we are all very mindful it is a process, and somewhat we need to just see the commitment to the sustainability piece being planned in some amount of trajectory. And I think that's enough, obviously, for us to maybe reconvene at a later time, but it's all you need is an element of impetus to start building upon the sustainability piece, but just being able to inform our clients what's available for them. And now we look at each transaction with an ESG angle is in itself helpful to start a debate and to start working collaboratively to make it happen going forward.
Yep. No, I mean, now that it's just even part of the conversation is half the battle, right? So we have to be there. A couple of years ago, we're not there yet. We have other battles to fight, wars to deal with. So now just being part of the conversation is a first step among many. So got a couple wrap-up questions. This is a little bit. We'll go into a jurisdictional question about India. Given the size of India order books, how is MUFG thinking about this jurisdiction in light of the Go First bankruptcy? And go.
There's a lot of complexity surrounding this question. And again, I think there is obviously the way MUFG looks at transaction is there is a country risk, there is an operator risk, there is an asset risk. And we would look at all those dimensions together to see, to support financing decision, but also to support our clients in the region. So it's not to say we wouldn't transact in the region. I think the region will absolutely need support in terms of also to finance such large order book, but it really will come with some cautionary look into credit risk and associated risk with the region.
Do you think lessees are more receptive to more robust security packages these days, or are they still a little bit? I mean, given what we learned from COVID, even top tier airlines, European, North American, were brought to the knees. Did not fail, but were challenged. So, and in doing that, because as you point out, lessor's concern is the cash flow and an asset risk. We have a mobile asset industry. We can take that asset out of A and go to B. So in doing that, though, we need to make sure that we enter into jurisdictions that are creditor friendly. And I don't want to get into topics that might be tough for you, but I can say, and if you just be like, "That's great," and we can move on, because I have another question that follows up. You're like, "Don't talk about this." But we are looking at the ability to repossess assets. And one question we have coming in here is given the fact that we have older aircraft, it used to be older aircraft going to at least to less creditworthy tertiary credits. Now we have new aircraft going to tertiary credits. Is the view that the repossession risk has gone away, or is this a punt to the right, or the security packages that are installed are help support this? Or I mean, what is your thought when it comes to looking at the industry, the risk the bank takes, etc.?
I think there's always going to be risk, and whilst the market is looking, is giving us all the right KPIs, and the traffic light is somewhat green, some recovery are more fragile than others. And, this is partly also what's motivating people to go through mergers, is consolidating, to be stronger, to face the market environment we're in. So repossession is absolutely a valid point to take into consideration, and maybe looking at the Cape Town Convention. But what maybe an additional point I'd like to make on this as well is on the insurance, because I think the insurance market is quite cautious after what happened with in Russia and Black Swan events. I think that's another element of risk. So I think going back to our ecosystem, I think any counterpart and these stakeholders will look at the risk differently. But bankruptcy will still happen. We've seen it with Gold already this year. Some airlines are still more fragile than others, and it might take a while to maybe improve their grades. But it's also part of the risk, and then you structure the deal accordingly.
Do you think that the insurance market is a little bit now? I mean, given the fact that Russia is starting to pay back its state-owned airline claims, and those claims are being actually seems like dealt with in earnest and good faith, if you will, to say, hey, we do want to reconcile this. That the insurance market will be less onerous going forward. I mean, there is a question about directors and officers insurance on this. I don't know if that's germane to your knowledge base. We can answer that offline if you like. But I mean, do you think the insurance market is going to calm down, or do we think we're still in this very heightened insurance high cost market?
I think it's still quite heightened. I mean, we've got our own insurance experts within the team, but I think it's still quite heightened and very reactive to what we're seeing in the geopolitical climate at this moment in time.
Yeah. No, it's again, we're resilient enough, and I think, and it's one of those things when we talk to investors, and we talk to those coming into the market, and we also look at sell side stories, that there is a story here. We have a story about our resiliency. We have a story about how we've come back from the ashes multiple times, and the fact that we've made money for investors and everybody else in between, and the fact that we have to write our path and we have to write our journey on some of this, especially when it comes to sustainability. We have to be out in front of this because the world can't survive without aviation. We definitely straddle the line on kind of where we are as a green versus brown industry, but we have to write our path on this. So let's close out on a personal question, and because this has been a fantastic discussion, and I appreciate the time you put together on all of this.
Thank you,
So
Bryson.
you're rather welcome. This has been fun. So we have a question from somebody who's saying this is a fascinating presentation. Any advice for early career individuals to stand out to their employers as they seek their first opportunity, as you did and I did way back when?
Oh, this takes me back. I think, and that's been an advice that I've received many of times, and it goes back to our dynamics and market, and there are so many resources available to us, and there are so many ways to keep abreast of the market. But I think just being disciplined enough to look at the news, to networking opportunities are incredible as well. There are so much opportunities for you to exchange with industry colleagues, to obtain someone else's perspectives on things. It's all about the connection and the engagement, but it's just making sure we are never complacent in our learning. It is, like we rightly said, there is no precedent. We just forever have to keep learning and challenge ourselves to move forward. Like I rightly say, we can't look back now to pre-COVID level.
Right.
I think in the industry there are so many avenues. There are so many ways to grow, but networking absolutely being one of those, and just keeping up with the learning and being very curious. If you're curious and you are able to do some outreach to colleagues, to contacts in the industry, everyone would always be very receptive and helpful. And I think I've maybe going back to the appraisers program, I've had a lot of people asking me questions, and I'm always there to help and guide. We have to look after the next generation of aviation professional, and I don't take my career for granted, and I'm highly grateful for, like today, the support I'm getting, with Bryson, for instance, and being able to have those conversations and engaging, because we all grow together from those. And this is the sheer power of our industry.
I'm not crying, you are. This is, but
no, but again, I think it summarizes it perfectly. And whoever has a question, I'm more than happy for them to reach out. And there's a lot of mentorship program as well that take place on our space.
I'm jealous. I'm totally jealous. I mean, I was telling somebody the other day, like we do a lot of work with the ISAT PDP program, and I teach, and I love it. Every time, every class has been absolutely fantastic. I'm jealous of the fact that they have a WhatsApp group on day one, and they got to chat to each other all the time. Like, if you and I had WhatsApp and LinkedIn and all this immediate networking, and but what I think is amazing is that, I've had some amazing colleagues that have come through the PwC and MBA and all the people I work with all my life. And the biggest thing I can recommend is that if you do leave on good terms, okay, with us, that follow up with the people that you were mentored by. I mean, come back. I mean, don't feel like you can't reach out and be like, hey, let's grab a coffee or something next time you're coming through, because I did that. And it was, and there are people in my life that I even met in Dublin this last go around, at least, that I had not seen in a while. And I would, every time I came through London, they were always generous with their time and would take my meeting. And those are things I remember. And I hope people remember that in me when I'm like, I'm want to give back, to say there, here's a young person on trying to make an influence in the industry and elbow their way in, if you will, to just give time to people, because you never know who's going to be, not that it matters, but I mean, you never know who's really trying to make an influence and has a lot to bring to the table. And we need to support that. We need to give back as much as we had received. And I
Yeah.
think, to your point, it's that network, and that network is an intangible asset, if you will. So
Yes. It's what keeps you engaged and
yep,
exciting, and
absolutely.
it makes the industry just this wonderful space.
It's the best industry
I know
ever.
it's a broken
I know.
piece,
Here we
but
are
it's
again,
just
but it just goes to testament. Like, you and I have been this for a couple of decades now. We've known each other for a long time. This has been an absolute pleasure to do this
thank you
with
so much.
you, and I look forward to seeing you in Austin. I assume you'll be there. And I think, is there anything else you want to say before we wrap up?
Well, thank you, Bryson. I was extremely happy to know you be our master of ceremony, and I think you've done a brilliant, work keeping on the question and keeping it lively and interactive and engaging. So thank you so much, and thank you very much to ISTAT for, again, helping the learning curve in the industry. And it's been a real pleasure. Thank you.
No, absolutely, and thank you for your time. This is not easy. This is takes a lot of time to prepare. And I've been on both sides of the camera here and being a moderator and also presenting, and I know that there has been this has been fantastic. So we know
Thank
it takes
you.
time. It's much appreciated. Thank you for contributing to the ISTAT online. As always, if
Thank
anybody
you.
else wants to contribute to the ISTAT Learning Lab program or have ideas for podcasts, we obviously reach out to the entire membership, because we can't be anything without you on any of this. And this has been great. And please be in touch if there's anything else. There'll be more learning labs coming up. I think right now, for most of you, we'll probably see you at ISTAT Americas in Austin in early next month. And looking forward to being in touch. Alice, thank you very much. Merci. Au revoir. And talk soon. Take care.
Thank you.